It's been a very interesting 2023.
I remember you were in Manchester Square, Marylebone. You've moved a bit further east to Fitzrovia, more or less. So it's a good sign that the team's growing.
And I thought, well, they're doing none of the work and getting sort of quite a nice returns. I mean, I'd say Nick is very lucky. The UK is the best jurisdiction by far.
When we started at Katch, there was only 2 of us, and we're now pushing on 20.
I think everything I've done in my career has taken me to this point here.
It generally means, so long as it's legal, we're pretty comfortable with it.
So you won't say no to anything. You'll always, at least give it a good chance.
Correct. It really sets us apart. I love the question.
Say euros maybe.
20 euros to invest. I'm not a shrinking violet, so I'd put it into European secured lending.
Hello everybody, welcome to this week's podcast. We are joined here by Nick Oakley and Maria Ryan from Katch.If. Nick is the UK portfolio manager and Maria is the portfolio manager for the EU secured lending market. So thank you for joining us.
Thanks for having us.
Thank you for having us.
How's everything going?
Really well, thank you. Yeah, it's been a very interesting 2023, but we're getting through it despite all the geopolitical turmoil, and we're in good shape, thanks.
Good. I couldn't help but notice the picture here on the wall of Bill Gates. Is there a story to that?
Well, when Nick and I first started at Katch, there was only 2 of us in a serviced office, and together we've recruited a team of about 20 now, but Bill was always with us. Our chairman personally selected that picture, so it's kind of a reminder of where we came from.
Absolutely. Yeah, we think it was some charity event, but it's got an underlying meaning that's pretty strong to us.
Wow, fantastic. Good. And obviously, yes, I remember you were in Manchester Square, Marylebone. You've moved a bit further east to Fitzrovia, more or less. So it's a good sign that the team's growing, things are going well, you guys are keeping busy, and a sign of good things to come. So I guess the best place to start would be to just understand a bit more about your personal journey so far, maybe one by one, starting with Nick. What's it been like? Everyone has a unique journey. Can you explain to us what that's looked like for you? Yeah,
so my journey's fairly vanilla in the great scheme of things. So I started off on Lloyd's Bank Management Training Scheme, and at my time at Lloyd's realised that actually I didn't like being a small fish in a big pond. Actually, I enjoyed rolling my sleeves up and being involved in a magnitude of disciplines, which has really steered my career to working for small banks and specialist lenders, which has ultimately ended up here at Katch, which is superb and absolutely plays to my disciplines. But yeah, the journey's been fairly familiar. I've always wanted to be involved within property lending, having had a family who have been successful property developers in their own right. Then it was really wanted to see it from the lender's side, and that's where I find myself for almost over 25 years now, which is quite scary.
Time flies. Huh?
Absolutely, but yeah, from my standpoint, it's a case of being in companies that I thoroughly enjoy working in, and those that I really feel that I can make a difference to.
Yeah, and you mentioned your family being property developers. Would you say that was probably the thing that got you involved in lending in particular? Was there a pivotal moment that made you realise, you'd want to understand more about, the lending side of the equation?
Yeah, for me, it was just being so hungry to get involved with finance, and then realising that the passion that I had for property unknowingly at that point really came to the fore. So yeah.
Great. And Maria, for you?
Sure, I started my career in 1999 at PwC Valuations and Strategy Group during the tech boom. I was doing tech valuations, industrial healthcare valuations. That was an interesting first experience in what fundamental value is in corporates. And I was poached into private equity, where I spent about 3 years covering UK and Europe. But when we were looking for financing as a junior member, I was tasked with finding the financing for the deals. We often used mezzanine to sort of leverage our transactions. And I was working on a deal, and I looked at the sort of the coupons that the mezzanine would get, or the returns, which was 16% to our 25% target. And I thought, well, they're doing none of the work and getting sort of quite a nice return. So I thought that was a good risk sort of adjusted place to be. I started working for a large mezzanine fund at the time, Indigo Capital. But had a sort of early experience of loss at the age of 28, where we were that slice in the middle between the senior debt and the equity. And the financial crisis came, and we were too small to really either buy out the senior or have a real seat at the table. And that sort of informed my focus on unitranche debt to SMEs, because there you can control the entire piece of the structure. You've got control. You're helping small businesses realize their strategies, but at the same time you can help them through tough situations with having a big syndicate ahead of you. And from there, even better, looking at first mortgage security against real estate, against real assets, was sort of the next step I took in my career to be where I am today, which I think is the best place really to be as a lending provider. You're helping small businesses, you're close to the asset, you're not so detached like on bigger deals, but at the same time you've got full control, and you can help the borrowers weather the storm.
Yeah. Thank you. Just touching on a bit earlier on in your life, we know with Nick, obviously, he came from a family of property developers. Was there anything that maybe would have encouraged you to get into this sector in particular when you were a little younger?
I mean, I sort of broke with tradition in my family of anything. I was born in Madrid, in Spain, in the late 70s, and my dad's a scientist. My mum's an archaeologist, and we relocated to Vienna, to Austria. For my dad's career, he worked for the Atomic Energy Agency. If anything, my career, it was a lot of people in public service, so, or doctors, or, and working for the government, or teachers. But I always was very practical. I liked to understand how things worked in a practical way. Why are there businesses? Why is there commerce? What does trading mean? So I studied economics at Cambridge, and I think from there really, applied myself to this industry. There's a certain extent where things happen by chance, like being recruited into private equity. I probably would have been very happy in PwC Valuations team had that not happened. So there's sort of exogenous effects that kind of propel you in a certain direction, as well as your own choice. But I think what was really important for me is languages that I speak. I'm Spanish. I speak Spanish. I'm fluent in German. That always shaped sort of the kind of roles I took, and also shaped how we structured ESL, which is really a pan-European fund focused on Germany, France, Spain, Netherlands as core jurisdictions.
Yeah, and I can imagine your language skills are very useful in what you're focusing on. European secured lending is, I guess you must use these languages all the time when dealing with different clients. Are they mostly English speaking?
Yes, but it is essential. I mean, for example, in Germany, a lot of the documentation will be in German. The borrowers will be very German. So the advisors will all speak English. But when you want to build that direct relationship with the client, you do need to speak the language and understand the culture. Same in France and Spain. You don't want to find yourself in a situation in Spain where you're negotiating complex matters and in a language that where you can't be so precise. So I think it is quite essential when having a European team to have that skill set.
Yeah, I can imagine. There must be quite vast, differences between, let's say, the legal side of things, per jurisdiction. Is there one jurisdiction in particular that is the most, let's say, difficult to navigate?
I mean, I'd say Nick is very lucky. The UK is the best jurisdiction by far across, Europe. If you look at Europe itself, you've got sort of a variety. But however, you can always implement structures which make the jurisdiction better. So, for example, France has, having a first mortgage in France, if you were, unfortunately have to enforce on it. It is not a very lender-friendly jurisdiction, which means that a lot of, very professional borrowers don't get the service they require because foreign funds won't go into that jurisdiction.
Yeah.
Or they will only apply certain structures like double Luxco if it's a certain deal size or loan size, which makes it profitable for them. But we work with a very good lawyer there, and what we implement is a fiducie structure where you place the shares and the assets of the borrower into a trust, and therefore we have that comfort that, in the worst of all cases, we wouldn't be spending 10 years through the tribunals in France. It would be immediate sort of action we could take, but equally we were able then to provide a product to SME borrowers that they can use that's easy to implement, and where they get, good conditions from us, and there's no real alternative for them in that market.
Yeah, I can imagine. So far in your careers, for the two of you, what would you say would be the proudest moment?
Great question. I think for me, it's actually the journey that we're going on here at Katch at the moment, and to be such an instrumental part of it. As Maria said, when we started at Katch, there was only 2 of us, and we're now pushing on 20. And to see that growth on an organic basis, and to see it being so professionally delivered, for me is really exciting. And yeah, it's certainly, whatever the future holds, going to be very tough to beat. The fact that we've relocated to significantly bigger and significantly nicer premises. The fact that the overall assets under management at Katch are now at 850 million US, and starting to push the door of that 1 billion mark. Really pivotal moments that we're experiencing, and actually pretty much at the forefront of. So that's super exciting.
And is that in line with your current targets? Are there targets per se as to, the quantum on assets under management, or?
Yeah, so we try not to give specific targets. The importance there is delivering the right lending for the right environment.
Yeah.
And as mentioned at the top of the podcast, it's super important that we get the right investments and projects for us in the given environment.
Yeah. And for yourself, Maria?
I'd agree. I mean, I think everything I've done in my career has taken me to this point here where, Nick and I think really have agency to create something new, something that reflects our experience to date and takes the best practice forward. We have very strong cultural values here at Katch, like transparency, honesty, entrepreneurialism, being dynamic, having autonomy.
Yeah.
And I think, I'm quite proud of the team that's coming through at Katch and the different products we offer, but also, I feel proud day to day to be solving problems for our borrowers. They come to us with, very few alternatives, and we're able to offer them a solution that's not a template, that's sort of structured to suit their needs, and then they can do their value add plans and we can exit. I never feel happier than when we exit a deal. Today we did. We got repaid.
Congratulations. Yeah.
Yes, thank you. In the European Secured Lending Fund of one of our loans in France. It's a
Okay.
building in France which a sponsor acquired, did value add to, and is now refinancing and taking forward to the next stage in its journey. So that was a successful day for us.
Yeah. Well, I take it, yeah, you two are very proud of what you're building here. And you mentioned themes of, having autonomy and being able to have a bit of control on what is the destiny of Katch investments, at least here in the UK and in Europe. And you actually touched on my next question with regards to culture. How would you describe the company culture here, and to what extent does that resonate with you two personally?
Yeah, for me, culture at Catch is very much about collaboration. And I suppose you lead by example. So Maria and I make a big habit of bouncing ideas off each other. There is no stupid question. So what might actually be a touch of genius is the piece that just throwing it out there as a random thought. So that collaborative working is really key at Catch. And across the disciplines, it doesn't matter whether it's the HR function through to the lending team, through to compliance and back again. Everybody's got a role to play. And I also think, again, Maria touched on it, the autonomy that we're given, the ability to think freely, so long as we can present ideas and concepts that are with merit and have proven ability, then we are firmly encouraged to get it in the mix and go and create. It could be a one-off solution for any given scenario, but it may be a solution that no one's ever thought of or put into the mix for this given case. Yeah, it's good.
Yeah, brilliant. I guess, company culture, very important. Everyone needs to feel like they have a significant role to play, and that, the future of the business is something that encapsulates all of these themes, right? So very good to hear that. And, as you mentioned earlier, it's been a challenging year, or just over a year, for a lot of people in this industry. And I'd just like to have some insight into, some of your biggest challenges in the last 12 months, and what have you done to, navigate these uncertainties and challenges that we all faced recently?
Yes, I would say, in a way, it's a split market, because on the one hand, it's a great market for us because a lot of banks aren't lending, and that creates opportunity. We see more more European pipeline coming through with great sponsors and very good business plans. On the other hand, value expectations haven't really adjusted fully, or only in a minority of cases. So we really are focusing on the opportunities where the valuations reflect the current market conditions, which greatly reduces sort of the pipeline of eligible opportunities we feel we can take through to committee. So we're being incredibly selective, and in a way we closed a large loan in ESL in April, and since then we've been focusing primarily on the portfolio and those realizations coming through this year that we can then reinvest in the last quarter of this year into lower LTV, higher return, very good projects that we've selected through the pipeline. Yeah. So we've been a bit cautious, but are now sort of moving forward with more confidence.
Sure. And, for those who don't know about what products and services Katch Investments has on offer, could you give us an insight into, what you can do for your clients?
Yeah, absolutely. So with regards to the UK side of things, we focus very much on bridging and development, and so we typically have no set product as such. It's very much solution based, but that's really focusing on geographically projects across the mainland UK, Scotland all the way down to the south coast. Within that, we look predominantly at residential offerings, but that's not to say we won't look at commercial or mixed use. About 25% of the portfolio at the moment is on a commercial footing. But it's really being at that sharper end of the first charge loan book. So what I mean by that is we are very comfortable in the stretch senior end of the market, going up to generally around the 70% loan to end value, 90% loan to cost, and within that being able to make a solution that fits for the underlying borrower and their given scenario. Usually they come to us because they are looking to stretch their position. Either they've got an existing project, development or bridge that is going beyond time, or and so where they know that they've got equity tied up, we're able to create a solution to give them that stepping stone into their next project. So yeah, it's really really open solution based offering from the UK side of things.
I'd say from the European standpoint, we almost exactly do what Nick does. With a slight deviation, we also look at leased real estate projects with value add components, so income generating, either leased, owner occupied sectors, so we can attribute some value to the cash flows of the business as well. Say if it was a care home or a hotel, an operating hotel, we can look at those kind of situations as well. And we have a slightly stronger mix towards mixed use and commercial and residential. And we focus on France, Germany, Netherlands, Spain, and other select European jurisdictions. But the premise is the same. We're looking for professional borrowers, sponsors, developers, investors. Typically, the team we'll be talking with are a group of, say, 5 who have one, FD, who've got significant equity already built up, and who have a business plan they want to realize, which has a good amount of profit in it. So it's about, like Nick says, they come to us because they want to seize that opportunity, and what we charge sort of is not that material in the context of being able to actually execute that plan.
Yeah, absolutely. And are there any asset classes that you won't lend on?
From my standpoint, it generally means, so long as it's legal, we're pretty comfortable with it. For me, it's the old adage of we look at everything on a case by case basis.
Sure.
So it's got to be the right product for the right demographic in the given area we're asked to consider. So yeah, if you're going to ask me to start funding single detached £5 million units in the heart of, forgive me Swindon, but in the heart of Swindon town centre, then we won't be able to assist. It's just being realistic, and we spend a lot of our time studying the geography and the markets to understand where the demand is for the given products that we're being asked to consider.
Yeah, so generally quite a holistic approach, case by case. So you won't say no to anything. You'll always, at least give it a good chance.
Correct. And that's really what we pride ourselves on is that flexibility, because we don't have any exposure to wholesale funding lines. We don't have the restrictions that quite often a number of our competitors do. So we have that freedom, that flexibility. That's not to say we're reckless by any stretch of the imagination. Far from it. We're pretty grounded when it comes to our security suite.
Yeah.
However, it's making sure that that security suite sits with that particular offering.
Yeah, yeah. So obviously, if having that flexibility is great. You mentioned obviously where you source your capital. Where is that source specifically?
So most of our investors are institutional investors, multifamily offices, some single family offices, mainly looking for a liquid private debt product. So our funds are open-ended funds. They're Luxembourg CCAF Rife structures. Our AIFM is Funds Avenue, who are regulated by the CSSF. So our investors have that comfort that they're stepping into well-regulated, established structure with a lot of checks and balances with third-party providers, and they're getting a first mortgage, predominantly backed private debt product that is also liquid. So they can redeem their investment, and if they so need to. And in particular, many investors in Europe and Latin America value that as an alternative to fixed income.
So could you give us some insight on a particular transaction that both of you have worked on that you particularly enjoyed the most, or it doesn't have to be the most, but up there anyways?
Great question. There are a number that immediately spring to mind. I suppose one that I've worked on recently, just on the outskirts of London, has been a pretty significant refurbishment project of a derelict house and conversion into a number of units. What's been great about that particular one, working with an experienced developer who completely gets it, but it's also the input that I've been able to add to the project, and I suppose again one of the bits that I think value add as Katch is important is being able to share ideas from other projects typically that we've seen or been involved in. So in this scenario that I'm thinking of, it became quite evident when I was on one of my 6 weekly site visits that there was just the layout of the first floor, although it was in accordance with the architect's designs, just didn't have a natural flow or dynamic to it. So wearing my heart on my sleeve, I shared my thoughts of it didn't feel right, and how instinctively, if I was the potential future purchaser of this property, how I could envisage it working better. And on the back of that, the developer gone back to the architect and has actually revised the drawings to make that work. And the impact is it's now got agents coming round to view, and the positive comments of how family friendly it is. So that's great. And on a similar theme, how being able to share my knowledge and experience, and also contacts when people aren't having a great time with perhaps a main contractor or architect or quantity surveyor, just being able to draw on experiences where I know other borrowers have had great experiences with particular professionals, and being able to do those introductions as part of the service.
Yeah, I can imagine that, being able to have a level of involvement where, you can actually really see the tangible outcome of what you've suggested and recommended must be quite rewarding.
Massively.
You can touch on, obviously, your background as your family were in property development. I'm sure there's a lot of resource to gain from that as well.
Yeah.
So would you say it's similar for you, Maria?
Yes, and my background is slightly different.
Yeah.
But I worked, for example, on the board of many companies in my previous life as a partner in a private debt fund where we did unitranche but also had equity participations. And we have, we do have situations sometimes where borrowers come to us and they want a stretched product. And I have the experience of being able to structure that for them to say, you don't have to go out and look for an equity solution outside and try and find, add more complexity to the deal. Already, we can provide that for you. And in one of the mixed-use shopping center deals we did this year, we actually invested we didn't invest in the equity, but we provided a stretched senior solution where we also took a meaningful warrant and have an observer board position, 2 observer board positions actually, where we are able to help the borrower implement that corporate governance, such as we have quarterly board meetings, we bounce ideas of each other, we monitor, we sort of query, we have a good working relationship, but that sort of professionalization also will help on an exit where maybe a more institutional sponsors coming in looking to take over, and we'll want to see that already in place. So I think that's sort of one way we can add value as well.
Yeah. And do you offer any mezz products, or is it all stretch senior?
So from the UK real estate side, it's all on a senior basis.
Okay.
So we're very happy to take that senior stretch position, which does then take it into quasi-mezz territory. But we like being first charge position. We think it's super important, particularly in these interesting, turbulent times that we find ourselves in, that we take that position.
Is that the same for the European fund as well?
That's correct, yes. Yeah. First charge. We're happy to stretch and take control. We feel the asset is very stabilized and secure, and the value, it's got liquid value that can be easily verified. But we'd never solely take a preferred equity or mezz position.
Okay.
Yeah.
And I suppose this question will be more for Nick, just because there are a lot of different lenders in this sector in the UK specifically. How do you navigate that crowded marketplace and make sure that Katch stick out as a good, reliable lender for anybody who could be interested in your products?
Yeah, absolutely. Well, firstly, it's making sure we've got the funds available to lend. I think that is absolutely pivotal. There are lots of people who say they can do things but can't. So we are very realistic in what we can do. The fact that we work on fixed rate, interest rate basis, I think is a key USP for Katch. It really sets us apart. We fully appreciate from a developer's standpoint there is so much uncertainty in the build, in the sales process. If we can provide them with just a little bit more stability, i.e. what the borrowing structure looks like, it's super important to them, and everybody knows where they stand, and to the point of transparency, everybody's good on that. And within that, it's then down to turnaround, delivery and service. I know everybody says it, but can they actually do it? And so in terms of when we receive interim development drawdown requests, being able to turn those around quite literally in hours, a day or so at the very most, rather than being sat on them going through some sausage factory of a back office. We're able to deliver as pretty quickly there.
Excellent. And what would you describe your typical client as, and what would the client experience be like as they go through the motions, getting a transaction through to completion with Katch?
Sure. I mean, I think what our clients can expect is an investment banking type service. They're dealing with decision makers, Nick and myself, and our direct associates. They can always get us on the phone. We offer transparency in the process, so we, will ask for the first information, give them quick feedback as to what potentially we could offer. If that's sort of agreed, then we'll get more information. And from my perspective, what I like to do then, as Nick earlier said, is just turn around. We sit right next, he sits right next behind me. I turn around and I say, Nick, I've got this. These are the features. What do you think? And get that first feedback, which informs how I then approach the borrower, and then we'll have a first stage committee with our credit risk officer as well and the partners, where they'll get a clear yes or no, or yes if, and then they have clarity as to if you deliver these due diligence requirements, then you know that you've got approval. I'm not saying we're going to be doing all this in a 1 week period. I'm not going to guarantee that, but you always know what it is that we require from you to get to that drawdown stage.
Yeah.
So if you can get it to us quickly enough, we'll process it very quickly. We won't be the slowest piece in the structure.
Sure.
And equally, for that to happen efficiently and not to waste, my time, the borrowers we're looking for are, quite professional. So it'll be a team that's done this before, that's got 5 people, say, in place, a finance director, accounting, that can deliver the information we require and understands the process. So we typically say we deal with professional sponsors. It might not be, don't need to be big corporates or big sponsors. They'll have their own banking relationships, but certainly, someone that maybe has spun out from a larger environment and is establishing themselves independently with that kind of setup around them.
Yeah, I get this all the time as well. I'll have a client, when time is of the essence, they want to know how quickly they can reach completion and get the transaction over the line. And on the one hand, it is, a function of the lender, but at the same time, the borrower also, if they are well organized and can move quickly, that's a big part of the equation as well. So, yeah, and just touching on Nick's point earlier on your fixed rate products, obviously, recently, especially in the last year, we've seen some unprecedented hikes in the Bank of England base rate, and I think it's been 14 in a row, and now it looks like they're stabilizing finally. Where do you see this going in the coming months and years to come, really, and how will that affect, how do you project that will affect your fixed rate products?
Yeah. So for me, it's I see more stability than a downward curve, certainly in the coming months, and potentially year or so ahead. So we're not expecting great movement. I think inflation is still at absolute pivotal point, and within that, it's a case of we think an air of stability will be seen. So we may see a tweak here by 25 basis points and the like, but overall we at the moment anticipate a time stability and reflection whilst we actually see what inflation's doing, and certainly not helped at the moment with the likes of fuel prices increasing, which certainly isn't going to be helped by the awful scenario we've got in the Middle East at the moment.
Absolutely, yeah. It always will have a knock-on effect, right?
100%.
And do you have any objectives or targets in the year to come specifically?
So the objectives and targets for us is to grow the loan book as securely and soundly as we can within our given remit. So we've got, as we said, we've got a lot of freedom to structure deals as we may. So it's finding the right projects to back with the right borrowers. So that's absolutely critical to us. And really, it's about communication. communication with both our existing borrowers, new borrowers, and introducers, as well as the team, so everybody is on message with what Katch is about.
Yeah. Well, we always end our podcasts by asking the same question. And I guess I'll ask it to each of you individually because we're dealing in different markets. But starting with Nick, in the UK market, if you had £20 million of equity to spend on real estate, how would you invest it using the products that Katch have made available to the market?
Absolutely. I love the question. So for me, it's a case of diversification, which is really what the Katch UK fund is all about. So it's making sure there is a balance between some short-term wins on smaller scale. So we've got some light refurbishments and the like that we can get quickly in and out. Maybe creating a bit of a longer-term investment portfolio there to share with our wider lending community, and then really leveraging on that to get one or two really meaningful development projects. I think where we are in the property cycle at the moment is going to put a lot of the developments coming on stream now that are due for practical completion in 18 months, 2 years, in a really strong position to firmly outperform the expectations. Certainly we as a lender do at the moment, and I just think it's in terms of projects that are, as I touched on earlier, right for that local demographic, and just making sure that in terms of structuring and pricing, in terms of development, it's well placed to survive any of the ups and downs.
Brilliant. And Maria?
Well, I've had 20 million to invest.
I'll say euros maybe.
20 euros, 20 euros to invest. I'm not a shrinking violet, so I'd put it into European secured lending. I think it's a great fund. You get diversification across geographies, asset classes, duration, project types. We've got some really nice thematic projects as well to do with the energy transition. We're going to move more in that direction. We're doing a lot of effort to incorporate ESG criteria into our lending. And I think at the moment, from my perspective, we have to be cautious in jurisdictions such as Germany, where there's a lot of pain still to come in terms of valuations. Developers are facing a cash crunch. So we're being selective, but there are other jurisdictions, Netherlands, Spain, there's still quite a lot of opportunity. In particular, the hotel sector is one that we don't have an asset in yet, and we've been evaluating quite closely. Some very interesting projects, stabilization loans that we can provide with solid leases and very liquid city center properties, and demand is only getting stronger in the segment with ADRs rising. So that's one sector we've got our eye on, but we keep diversifying. Residential, commercial, mixed use is still part of our portfolio. Brilliant.
Well, thank you both for joining us today. It's been incredibly insightful and informative, and wish you the best for the coming year, and we'll stay in touch.
Thanks.
Thank you, Tariq.
Thank you.
Really enjoyed it.
Super.
Thank you.
Been great.
Cheers.
We hope you enjoyed this podcast. If any of the products or services mentioned in this video are of interest to you or anybody in your network, then please do get in contact with us at info@navigatefinance.com, where you'll be put through to an expert advisor who will provide you with everything you need to know and guide you through the process to achieve a cost-effective solution to your inquiry. Thank you.